Welcome back to America's Commercial Real Estate Show. I'm Michael Bull. This segment is brought to you by Red IQ. Check it out. They turn multifamily data into actionable intelligence. Check them out at rediq.com. And speaking of multifamily, that is our topic today. And as we were just talking to Jay in the segment before, one of the opportunities out there today is in B properties and in C properties. And if you think about workforce housing, they're not building any new workforce housing. It's too expensive. So as you know, on the show, we like to talk to the analysts and economists. We also like to talk to the people in the trenches, the people actually owning the properties, and see what it looks like from their desk. Please welcome our next guest, is Steve Firestone. And Steve is managing partner with Crown Bay Group, and he's joining us in Studio One. Steve, thanks for being here today.
Thank you, Michael, for inviting me.
Well, Steve, you guys own and manage a lot of these kind of workforce type housing properties. And what size and number of units are you typically handling?
We typically try to go for between 200 and 400 unit properties. It might be 150 to 200 if it's if there's a good deal there. And they are mostly workforce housing. We try to stick to the more of the C plus type housing, maybe B minus.
And have you seen good rent growth in that area?
Yeah, I mean, we've seen great rent growth as a lot of cities have over the last few years, very steady. It might have slowed down a little bit from the last few years, but it's still, I would say above average to potentially to other asset classes. Doesn't really seem to be any slowdown on that side, to a great extent.
What's it like to manage those types of properties? A little tougher than the A, I guess.
Yeah. C properties is definitely you need to get used to it and have some experience behind you. Like I always say in one way, managing C properties, it's not rocket science, but you definitely need to know what you're doing. Yeah. And it's really simple though. I mean, to me, if you've got a C class property with workforce housing, which could be anybody from working from, shopping malls to the airport to, local industrial factories, distribution. They only want one thing, or they only want a place to live that they know is safe. They get good service, and it's clean, and the management treats them right. Yeah. And that's it. And if you can do those three things, those few things, then there's no reason for them to move across the street or down the road or whatever.
Yeah, take care of your client, right?
Exactly.
Yeah. Yeah. What type of tenant traffic are you seeing today? You've been in this several years. Is your tenant traffic kind of steady, or is it trailing off or increasing with the job market where we are?
I think it's been pretty steady. Okay. I guess it depends, what market you're in specifically. Obviously, we try to target high growth markets. And also the specific property. We always, when we're doing our due diligence, if we're, just because something's a good deal doesn't mean you should buy it. I mean, there's always a reason potentially. But if there's, we try to feed off other people's due diligence, like on the retail side. Of course, if we're buying near anything that's recently been built, whether it's a, Walmart, or especially, things near Walmart superstores we like, or where we see new, new fast food places or new other kinds of retail going up. We know they've done their homework and they're not spending money to build those things for nothing. Yeah. And that only, enhances the attraction to a tenant to your property. So those are the kind of things that we look for. And of course, new businesses that, are going to eventually open. So if you're getting like we have a property in South Carolina, and we knew that they were building the biggest factory ever built in Columbia, South Carolina since 1980s. And it's, 5 minutes behind our property. And there's only one road that goes there, and it's the road behind our property. Oh, nice. And they're hiring 400 people. Well, you don't get 400 people locally, and they don't hire them overnight. So they just, we knew we'd have to wait a year. We rehabbed the property, and now we're working with their HR as they slowly, bring in people from other states, other cities to fill those positions in the factory.
Right, that's great. And maybe that particular property, it sounds like it's not an issue, but when you overall look at your properties as you buy these properties and you fix them up and you start raising rents, are you having issues with affordability, some of the tenants actually being able to afford to pay the rents?
I mean, of course, we're buying them to add value, and we everybody wants to raise rents if you can, but we try to keep it in line with the affordability in the area. Vacant units or skips and evictions are an owner's worst enemy. It just costs money to turn a unit twice in a year, so nobody wants to do that. So, we don't want to make people pay something that we think that they can't pay. So we do try to, take that into consideration, and if anything, we'll do it a little at a time. So as they say, if your property's full, your rents are too low. So we try to keep an open mind on that, and also it really depends on obviously their credit, their worthiness, their job, their income. So we do take that into consideration, and a lot of times we get like kids, and I say kids, or younger people who's their first time out of their own home, and they don't know how to manage their money. So although they might be, go through our vetting process, unfortunately, those are the types that really sort of almost fall through the cracks in that way, that because we can't manage their money for them, and if they're still young and they're going to go out and spend it on other things and they're going to be short at the end of the month, that's not really our problem, but it becomes our problem.
It becomes your problem, that's right.
So on that end of it, it's affordability. But I think the people that are a little bit older and that have steady jobs, they have learned how to manage their money by that point, and they don't want to have to move again, because that costs them money too.
Yeah. Well, I when I was a young man, I started in this business. I started managing apartments, and I started selling them when I was 19 and still in school. And when I had a management company, and we managed a lot of B and C properties as well. And one of the big things that I saw was helpful is to really stay on top of collections. And I was kind of a no-story guy. If you don't pay by the 10th, we're filing a dispossessory. Sorry, but we have to do it. Yeah. What are some other tips related to managing those types of properties? You mentioned that it's more difficult than an A, and that's where a lot of the upside is in these types of properties, if you can really manage them well.
Absolutely. I mean, there is great upside there. A lot of the times when we take over properties, we say that we buy this, value-add properties, as they call them. But that doesn't necessarily mean that, we're going to go in there and do massive work and all that. It runs the whole gamut from it's just not being aggressively managed, and there's nothing wrong with it, to doing, full renovations. And some of the ones that we do take over are, just not non-aggressive management, where the owner has maybe too much input, and gets too personal about things, and starts bending the rules a bit, which you really can't do and shouldn't do, even by, the housing rules and things like that. But having management that's totally impartial is very important. You have to have rules, and one of the big things, just to digress a little bit, but it's a similar thought, is that you need to train your tenants. I'm sure a lot of people have heard that, and it is true. And that's not, it's not to sound derogatory in any way. They need to know the rules of your apartment complex.
Right.
And once they come in, if you stick to the rules, you have rules, then they do stick to it, because they know you mean business. So you can't just, do one thing for one person, something for another. So, we file on everybody, whatever, the day, I think it's only 5 days after the month, but that's not to say they're getting evicted, but we file because they know they're late. That's the rules when you signed up. And, yes, there's a late fee. And we have a lot of tenants that do pay late. And it sounds bad, but it is actually a regular income for all properties of that, class. And so we don't want to say necessarily, if everybody paid on the first, we'd be missing some other income that we would usually have. But at the same time, it would be nice if they at least paid, we do get the bulk of it early on, by the 10th usually. only because we stick to the rules.
Yeah, when we had the management company and managed a lot of those properties, our Januaries were pretty strong months, a lot of late charges. Steve, how do you look at the current market there in that class of type of property? I guess you're mostly in the Southeast in these kind of C kind of apartments. Do you think it's a time to sell these kinds of properties in those markets, or is it time to buy? Is it a buyer or seller's market here?
Well, I guess, the rents and increases in rents, and of course sales prices although they do meet and help sell the property, they're also two separate issues. So I think in the market at the moment, probably in most larger MSAs, is a good time to sell.
Yeah.
But then of course you've got the dilemma of replacing them.
Right.
And we sold 4 properties last year, thinking, this is the peak of the market, and we probably would have got a lot more even now. But they were great prices. We made great returns.
Yeah.
And we just move on and hope that we can replace them. And luckily, we have a good pipeline and a good network. And
so time to sell, but also you're still buying as well.
Yeah,
right?
and we're still selling at the moment and still buying.
Right.
So that's just something that hopefully, if you're going to do both, you have to have a good developed pipeline, like I said, and good relationships to find product. But nobody knows where the top of the market is. It's like anything, in the stock market too. Yeah. If you're going to wait for the top, you might wind up in trouble.
Yeah, so I like that tip.
We don't look for the top of the market.
Yeah.
If it meets our goal and our projections that we set out for our investors in the first place, and if I'm in year 3, I try to be really strict about that, and I think that's a really important thing too. If I'm on even if it was helped by the market, if I'm on year 5's projections in year 3, it's sell. That's what the numbers tell me. That's what I did.
Watch the numbers.
Yeah.
All right, Steve, great information. Thanks for joining us.
No problem. Thank you for having me.
All right, stay tuned. Next, we'll have a broker his day-to-day selling apartments. We'll get his take on the market and some tips and strategies. Stay with us. I'm Michael Bull. This is America's Commercial Real Estate Show. America's Commercial Real Estate Show is brought to you by Bull Realty. For customized asset and occupancy solutions, visit bullrealty.com. Commercial Agent Success Strategies. Incredible training for commercial agents. Visit commercialagentsuccess.com. BOMI International. For facilities and property management education, visit BOMI.org. Buyproxy.com. Your global commercial real estate listing service. Visit buyproxy.com. Red IQ. Turning multifamily data into actionable intelligence. Visit rediq.com.